Hey, everybody. Azad, can you hear me okay?
Yep, can you hear me?
Awesome. Yep. Okay, all right, let's kick off. Well, congratulations, everybody. We've hit a new milestone. And what I'd like to do today on this space for Celsius creditors, obviously, if you're just listening in as a non-Celsius creditors, welcome. But almost all of us are Celsius creditors, so we're going to be hugely focused on that as usual. We've been on a journey for the last 10 months, and I still think we've got at least another 6 months to go until we're all shareholders and working together on a vision that we're all supporting, depending on where you are, whether you settle in one of your agreements or whether you stay within the earn group. And what I'd like to do today is do a little bit of a recap on the different types of plans so that we can set the context for what comes next. Because just because we got a winner of an auction, our work is not actually done yet. So let's celebrate the wins while we got them, but also appreciate there's still further to go. And I'd like to elaborate a bit more on that as well. Then I'm going to go deep into some of the specifics of the plan. Now, you may all have read it, or some of you just haven't read it, or you may just be reading tweets from other people. So I'll go through some of the things, and I'll add a little bit of context on the different parts of it, and things that I still think, because this isn't the final part, there's still room to get the interests aligned and various other things. So I'm going to be quite critical, but at the same time, really grateful for the position that we're currently in and that we get to move forward and everything there. And then finally, we can bring some people up. And I'd like to share with you some of the things that we can do as creditors, because now they need to get our vote. And to get our vote, we need to understand, exactly how we make sure that we get what we need in order to try get the recovery and go through some of the hurdles ahead, because we've still got the regulatory hurdles, we've still got the judge approval, but recognize that we have a significant amount of power in this situation, and that is the final vote. Okay, so let's go through a little bit of the history, and also there are a bunch of different characters now. They're not allowed to solicit at this stage, so we will invite them up to a space when they're allowed to do that within the confines of what their legal counsel is. And the winners actually had the same legal counsel that we were using when we were involved in the bidding process, Brown Rudnick. And so I'm very familiar with the types of challenges of trying to communicate at the same time as meeting the bankruptcy code requirements. So at some stage we'll bring them all up. They said they'd love to do that. Just got to get the exact advice and make sure that they don't do anything to compromise their position. Okay, so let's have a look at some of the different bids, the journey that we've been through on the 10 months, and then we can understand the different options that we have as creditors from here, because we do still have options. And so if we rewind all the way back to the beginning, the very beginning is when I was a shareholder and one of the largest customers at Celsius. I didn't know I was, but it turned out that I was. And as an individual, I think I was the largest individual. And so, that put me in a bit of a situation. And so immediately my reaction was to do what we did with Bitfinex, which is to support my shareholding and try and do a standalone reorg, where you get the company to maintain its shareholder value, and you make creditors whole. And you try and make creditors whole through a combination of debt and equity. And so that was my immediate plan way back then. Pitched it to Alex Maszynski and Citibank at the time, and we all know the story there. This is when we hired the counsel that US Bitcoin Group is using, the winners of the auction, Brown Rudnick, and they started to put together a fund structure And we started to go around industry and saying, look, we did this with Bitfinex, and we got our soft commits for about $6 billion at the time. They put together the fund, and that was based upon a security token stroke stablecoin model, where the debt would be backed by a stablecoin, and then the stablecoin would be issued and converted into equity. The problem with that is I didn't realize that this was a massive fraudulent operation, and Mizhinsky was a criminal. So we found that out, and we had the Chapter 11 disclosures, and the whole journey that we've been through. So once we knew that, obviously all of the investors started to realize that you can acquire these assets for cheap. And so as a creditor, I didn't want to subject myself and the relationships that we built with all other creditors to a predatory bid. And so we set about trying to get the community involved in a creditor-led plan. And if you remember back then, it was like Mary and BitShack and everybody. They were coordinating all the different steering groups within the community. And we came up with, and I released a 7-part video series. What I was trying to prevent with that video series is predatory bids, where everyone's competing to buy the assets on the cheap. Because each and every one of all the investors in the original syndicate I put through, when it came to actually finding out, as soon as they realized that this was a fraudulent operation and we got all of that, they wanted to buy the assets on the cheap. It's a natural thing. Why would you cover the hole and do debt when you could acquire the assets on the cheap? And then that's just the nature of distress vesting, as we found out. And if any of you were at Bitcoin Miami, you saw some of the people that were sharing their presentations on distress investing. So I wanted to prevent that. So I put together a scenario where we could have a stalking horse bid. And a stalking horse bid was based on what we call a bid reorg. And so I was trying to help the community understand that Celsius 2.0 was never going to happen. There's massive regulatory hurdles. You've got to get rid of the board. And I started presenting the whole message of new board, new code, new risk model, new licenses. And we went on our massive journey of everyone trying to educate themselves on what licenses are needed, what Celsius did wrong. We had the examiner report, all that type of stuff, and all the journey that we've been through together. But the video series was essentially the foundation for what was eventually used in this stalking horse bid. And one of the people that participated in that process early on was around about September, October last year was NovaWulf. None of us knew who they were at this time. They were looking to get skin in the game, so they were acquiring claims, and then they got their skin in the game, and they started working. And Bank to the Future was in the bidding process at this time. And what we wanted to do was create a structure whereby competing companies would give their equity to Nuco, which I was calling a fund at the time. And this was really important because I didn't want anybody buying the assets. I wanted all creditors to receive all their coins and all of their assets. And their coins were going to be in custody, where everybody gets all of their coins back. And all of the assets were going to be put in a fund or a company, Nuco, and creditors were going to be 100% shareholders. Members of the community were quite confused at the time. They were talking about using Cell token to turn it into equity and then turn it into a mining operation and give Celsius 51% of the equity, and just all sorts of confusing structures. But the video series ended up laying out that framework for the bid reorg. And so that was where bidders would compete in order to give their equity to the Nuco in exchange for managing all the assets. So they get a bunch of users, and when they've got a bunch of users, that's good for their business. And in exchange for that, rather than them trying to get all the assets on the cheap, you just give creditors all the assets, and you also give some of your equity because it should make your company more valuable. In order to demonstrate that, Bank to the Future entered the bidding process, the company that I'm the CEO and co-founder of, and we applied to be a stalking horse and we contributed our equity to that new co. And that was the framework that we ended up with in this auction. But a few things happened. Obviously, FTX collapsed. We tried to acquire a lending company and restructure the debt so that we could have a solvent lending company with the licenses. That deal fell through. They were exposed to FTX. We had that situation. And so the bid was a bit of an epic failure, really, because now nobody was willing to buy the assets, even on the cheap, even for pennies on the dollar. And so that really became the structure. But at this stage, once we realized that the acquisition wasn't going to go through, and therefore we couldn't do the lending business, and we couldn't maintain all the different parts of the business. And if you remember back then, the whole idea was to have a proof of stake business, an Ethereum play, a proof of work business, a mining play, and an application business, security tokens, or securities, a securities platform that took all of the private equity and all the different assets and maximized it. And then the creditors would have equity in exposure to the company that was growing as a result of building the business that could take advantage of all these assets. So that was the structure. Okay, we got to that structure. But in this auction, and I'll share as I go through, some parts of that structure were really enhanced and then taken out. So I really want to understand a little bit more about that. I'll continue to, all day I've been on different calls with different parts of Celsius and various other constituencies and people that are involved in the auction. But our mining partner was a company that just won the auction, which was US Bitcoin Group. So we were working on a deal in order to put that through. And then we pivoted, really, because after the FTX collapse, to what does a controlled liquidation look like? And so a controlled liquidation is essentially where you don't pay anything, you don't give your equity, you just literally are like a service provider, giving everybody all of their coins and all of their shares, all of their assets. And so the second bid, and this was the one that was leaked by Tiffany Fong, was where you had a couple of predatory bids, which was just trying to buy your coins on the cheap, like Galaxy and various other ones. And then you had Binance, which was like paying like 20 million and just giving you whatever coins are left. And then you had NovaWulf, which used the original structure, and they stuck to the original structure, but they didn't give any equity in their company. So, their original version of the bid meant that they were going to grow incredible companies by having all of these assets. And we were essentially going to, our assets were going to use to accelerate those businesses. But we weren't going to benefit from the growth of NovaWulf's different businesses. And then there was our controlled liquidation, which looks identical to like what the BRICS, the backup bid, have won without all the fees. And so obviously, we can start going into those different structures with that framework. And that really lays the foundation for where we are today. And so we put our controlled liquidation, which was the leaked bid that was put through. And then we just decided that Bank to the Future is going to step out of the process. We're not a US first business. And we started, I got this offer to work with Celsius in order to be a plan consultant. And I didn't take any pay. I just did that to try and get the best result we possibly could. And I released a video. And in that video, I said, if you are able to bid on any of these parts of any of these assets, here's how you compete and here's how you do better than NovaWulf. And so that video was called I think it was the best plan. Everything was published on YouTube. And so that's where you had the different areas. And then suddenly, as the market started to recover, we were told that there were no bids that maximized the assets, which was a shock. because we knew what those bids were, and that NovaWulf was the sponsor. And the sponsor just means they're being awarded to work with Celsius. And then, if you remember, we then started to release videos, and those videos were spaces and lobbying in order to make it a stalking horse and a competitive process. The market started to recover. We entered into that competitive process, and they decided to do a version of the auction where any creditor could sign an NDA. Hold on, I'm just going to put that kettle off. That's driving me nuts. 1 second. Sorry if that's whistling a lot. Okay. And then we entered into the stalking horse process. Right. So that auction is now concluded, and it was really going through two companies. Actually, there were three companies, and one of them was determined that it's not feasible. And two other groups of companies put together that process, and that was NovaWulf and Fahrenheit.
Hey,
And
Simon.
then they also,
I don't mean to interrupt, but Aaron from the UCC said he got 15 minutes if you want to invite him up on stage to talk about the term sheet.
Yeah, sure. Okay, let's do that. Great. So let's bring you up as speaker.
Hey, Simon. Can you hear me?
Oh, you on there? Hey, Aaron.
How are you?
Yeah, go for it. You got 15 minutes. Give us what you can.
Well, yeah, I thought I saw you were doing this and thought I would jump on and I could maybe answer any questions people have on the term sheet that was filed last night. I think just as a starting point, we're real excited about the transaction. Real excited to put the auction behind us and start moving forward. But I know all of you all have been following this for a long time, have dug in. We filed the term sheet late last night. But yeah, happy to answer any questions. Have 15 minutes and just thought I would jump on so that we didn't have to delay any of that anymore.
Okay, awesome. So, well, I won't hog the stage because I've got an opportunity to ask a lot of questions. So I think Joe's up here. Joe, did you have something you wanted to ask the UCC?
Well, I just wanted to really say thank you to Scott and Thomas and everybody in the UCC and Aaron for, not, I think everybody was concerned that this was just going to go to, the only bidder that was really distressed asset professionals. And at the end, you really worked this like crazy. We thought this was going to be a 1 or 2 day auction, and you guys just kept grinding away until you got the best possible results for creditors. We have a lot to go, a lot more to go, a lot more hurdles to overcome, but just thank you.
Yeah, thanks. We have a lot more to go. This is just the beginning, but one of at least my philosophies throughout the whole auction process was to give my clients, which are the members of the UCC, direct access to the bidders and as much access as they wanted. Because, unlike most bankruptcy auctions where it is a, dollars and cents process, a lot of this is, who's going to lead this business. And I think I told our guys a lot. We had two great choices, which was really great. NovaWulf, they're a great group and they are incredibly talented. And the Fahrenheit group is the same. And, a lot of the reason why it took a long time is because both sides were putting forward new ideas. We had to test those. And it's not just Scott and Tom, it's all of the members of the UCC who joined and really, dug in. That was in New York in person, on phone calls a lot. But I think that, a real testament to our clients doing this and doing it for free. I get paid to do this. It's been talked about a lot, but those guys don't, and they really leaned in and have done an unbelievable job and really put a ton of their personal time and effort to trying to get the best result for all of you guys. And I think that, competition is the way you get the best result. And we had two incredibly competitive groups here that, worked their asses off, pardon my French, to put the best bid forward. And they both put together unbelievable bids. And it was a really tough choice at the end.
Okay, who else would like to ask a question? We put some people at stage.
Yep, Nat here. Thanks, Aaron, for your service. The main point is the earn treatment. I see the term sheet says 450 million minimum to be retained by the new co in liquid cryptocurrencies. All right. So let's say let's say this plan get confirmed. Hopefully, we have an effective date. So let's say we have 3 billion liquid crypto asset left at the effective date of the plan confirmed. Does that mean if we subtract 450, 500 million liquid crypto, the remaining will be distributed?
So
How do
it's
you
not
understand?
quite that's the basic framework, but it's not quite the remaining. To get out of bankruptcy, you have to fund all of your administrative expenses in full, which includes all post-petition trade, post-petition salaries, right? The thought is on the petition date for the business to keep going forward, everyone that does business with it has to be assured they're going to get paid in full. So we're going to put up to 450 into NewCo, and that's required for regulatory reasons. It also is required to seed NewCo, and it's going to form, one of the largest staking businesses out there, which I think has a really good chance for success. And one of the unique, elements of the Fahrenheit bid is they're going to put in the staking IP and other things that Noah Jessup has worked on a lot. That's going to be in day one. And so, the Shanghai upgrade, that was the starter pistol, and NewCo is going to be able to capitalize on that right away. The rest of liquid crypto is going to be distributed, which is a big difference from how the plan was originally constructed, because a lot of that liquid crypto was going to be retained with respect to the loan settlement. And that was, one of the really hard decisions we had to make. Was we were looking at all of this, and we heard loud and clear folks want to get a lot of liquid crypto back. We also, I've heard Simon say it time and time again, the ability to create a new company and deliver equity to shareholders and creditors is going to be the way that we make people whole. And so we were focused on that as well. And that amount is going to be retained to allow NewCo to do that. The remaining amount will be distributed to creditors and will be used to fund administrative expenses and senior claims. I don't know if there are a ton of senior claims right now. Those are typically tax claims, secured debt, things of that nature. I don't believe there are a lot of secured debt. In fact, I know there's no secured debt except for a couple kind of claims here or there. And so it's really going to be admin expenses, and then the rest is going to be distributed to creditors.
On that final point, sorry to interrupt, the IRS administrative claim on FTX, you are not concerned we will get to see something like that? Thank you.
There may be tax claims here. I know about that. I think it was like an astronomical number, something like $44 billion in FTX. And it's I am not sure. I have to go back and check all my notes. I'm not like crisp on what they've asserted here. And it may be, but that's part of the struggle here is we're trying to structure the whole transaction to make it most efficient for everybody, and that's NewCo account holders, the like. And so tax is a big part of this, and that's one of the reasons we're really lucky to have all of the experts at Kirkland and White and Case that can really dig in and try to structure this in the most tax efficient way.
Okay, Azar, do you want to bring up some more questions?
Yeah, let's bring up John.
Good.
John, do you want to
Thanks.
go next?
Thanks, Assad. Can you hear me?
Yep.
Simon, Assad, thank you so much for hosting this, and Aaron, congratulations on procuring what seems to be a pretty awesome deal. I'm part of the custody ad hoc, so I get questions. Tony V, who's on the call too, is a member of a few of the groups, but sometimes we get inbox questions on Telegram and on Twitter. The two questions I've gotten so far are, as far as preferences go, will that stay the same as was with the NovaWulf deal? Will those terms probably stick or be similar? And then second of all, do we have any idea when this is going to go into effect as far as the new code? Will it be at the end of the year? And if so, do you have any approximate timeline on that? Thanks.
Yeah, so the preferences are going to stay the same. We told the bidders that that was a decision of the debtors in the UCC, and took that out of the bidding contest. And I think that's important because I know it's a thorny issue, and I want to make sure that NewCo succeeds on its own. We can deal with past Celsius and future Celsius, and the way I think about it, future Celsius should be unburdened by any of the kind of issues that we are dealing with, to sort through kind of the legacy stuff. With respect to the timeline, I would say it's uncertain. What I will say is I am wholly focused on getting this out as soon as possible. There's a number of things that have to occur, and switching bidders definitely puts a little bit of additional work ahead of us. So as you all have been waiting for, we've got to get that disclosure statement on file, and we got to do that as soon as possible. We set a June 30 drop dead date, and I can tell you that that was extremely important because we need to know whether we're good to go or not by that time. It's my goal to beat it, but that's the last possible day where we will file a disclosure statement. So from right after this call, I'm going to be jumping on another one to kind of sketch out our project roadmap to get to revised plan disclosure statement. And once we get those on file, then the court can set a disclosure statement hearing date, which is going to be when he decides that what's in the disclosure statement provided all creditors with adequate information to vote on the plan. And that's going to include tax consequences. It's going to include descriptions of the plan, descriptions of the Chapter 11 case. You can think of it like a stock prospectus. It's going to give you all the information you need to know about whether to vote for NewCo or vote against it, because that's what we need to do to get out of Chapter 11, right? We have to have a creditor vote for this. Once the court approves a disclosure statement, he's going to set the timeline for confirmation of the plan. And there's a minimum amount of days you need to have. I think it's somewhere between 28 to 35 of a solicitation period where we send out the approved disclosure statement, the ballots to everybody. Everybody's going to get to vote. Everyone's going to get to raise objections to the plan that it doesn't meet the confirmation requirements of the bankruptcy code. And then we'll have a hearing before the court where he determines whether to approve the plan or not. And at that hearing, you have to bring affidavits and bring the ballots to show everybody that we've got the vote and we can move forward. Once you get past the confirmation hearing, there's going to be a number of steps you need to take to go effective. And it's somewhat similar to an M&A transaction where you've got to, distribute the money, you've got to form NewCo. All of those things are going to be happening in the background as we move towards confirmation, so we can get out as soon as possible. But there may be a slight lag between the confirmation date and the effective date. And I think you could see this in the Voyager case, right? Voyager confirmed a plan. They then had that thorny issue. Binance ultimately backed out, and they most recently went effective, right? That gap in between is the kind of uncertain part. So I'm not sure I can put a precise date on that. I think we first have to get the disclosure statement on file. Then the court's going to give us a hearing date on that, and that's going to set the whole calendar in effect. But that's what everyone can anticipate moving forward in terms of a timeline.
Hey, Aaron, one of the things maybe you could talk to in this plan is in the NovaWulf side, they were my biggest concern was always, is this a side gig for people to take fees from the estate? And there's no, they've got their own businesses which they're mainly focused on, and then this is kind of like a side gig. And so one of the ways of overcoming that was NovaWulf was going to put figure equity into NewCo to align interests so we benefit from the growth of a platform if they end up using it. One of the features, it seems, of this plan is that there's going to be a lot of other businesses that will really benefit from this, but not actually we'd get the economic value from that. How have we managed like those concerns?
So in terms of the side business, Steve Kokonos is going to be the CEO and Joel Block is going to be the CFO, and this is going to be their job. I've spoken with Steve, really confident in him. Our committee met with them exclusively, and I think it's a really exciting opportunity to get the CEO of a company. He was formerly the CEO of Algorand, who is a experienced Web3 guy, and he's also formed a number of other companies. So this is going to be their job. There's also a provision in the term sheet that we put in there where the new board is going to work with the other members of the Fahrenheit team to make sure that they are committed, and all of those guys are. Noah, Ravi, Mike, they're all going to be part of this group, and that's one of the really exciting elements of it. And so, Simon, I think that it is safe to say that this is not going to be a side gig that's just meant to collect fees. One of the other big wins for creditors from this auction was we were able to move the management fee from a percentage of NAV to a fixed management fee and equity in the company. And I think that's pretty typical of a your traditional corporation. And I think that incentive structure makes it so that the management is really standing alongside of you guys, and they are going to have aligned incentives to make sure that they maximize value, because when they maximize value for you, it's going to maximize value for them through that equity stake. One of the other big wins we got was the incentive comp, which is through auction or options, is going to be indexed to crypto or the equity of Nuco. Both the Fahrenheit Group and NovaWulf gave the debtors in the committee the option to choose between those two. And so the thought there is that incentive comp is not going to hit merely when cryptocurrency prices rise, because as you all know, it's the company hopefully will be very correlated to cryptocurrency prices in terms of being a large ETH staking business and Bitcoin mining business. But if Bitcoin prices go up, you've got to beat that index to hit those options. And so it will really make the management team aligned to outperform crypto and make returns above that so that it can return more value to creditors.
Great. So do you want to, we'll keep going until Aaron says he's got to go.
Yeah, I think I got about 10 more minutes. So.
Okay, we got Orpheus next.
Yeah, thanks. So I noticed that there was something in the document that said 500 in liquid crypto remains for Nuco. What does that mean in terms of potential? Because I know everybody's just dying to find out what they're going to get back on their claim, or what, like in the realm of what percentage seems likely. Now, I know that you guys can't figure that out specifically until you've hashed out some of the other numbers. But like, are you guys thinking of selling any of the assets to increase that liquidity? Or, can you give us a little bit of information about what we're looking at potentially for recovery?
Yeah, I don't want to take a stab, and I'll put this one out there. I'm a lawyer, not one of our financial analysts, so I've certainly seen stuff, but that's not my specialty. What I will say is, our goal, and one thing that our committee was entirely focused on, was to distribute a lot of liquid crypto to folks, because we heard everybody loud and clear, and to make sure we had an opportunity to maximize value and really to drive a recovery that could bring the most back to creditors and hopefully over time make them whole. When everybody gets the equity in Nuco, they're going to have a decision of whether to hold it and wait for the recovery, or the nice part about getting equity is you can always sell it. And when you're selling equity, you have to realize whether there's a market there. And we're trying our hardest and working with the Fahrenheit team kind of make sure that there is a market. So my hope is that everybody's going to receive a decent slug of liquid crypto, which will most likely be in the form of BTC or ETH, and then we'll receive equity, and then everybody can make their own decision about whether to hold that equity, sell it, or how to kind of make their own choice with respect to the consideration they receive.
Aaron, will Celsius be rebalancing to Bitcoin and ETH, or will that be something of Nuco to do?
That's something we're working through right now, Simon. I think there's a couple different thoughts on that, but we want to make sure we are regulatory compliant, and if we do rebalance, we want to make sure that we are doing it in a way that is kind of a-okay with all the regulators, because one of our North Stars throughout this process has been to make sure we are following all the rules and regulations. I think that's kind of table stakes for this new company. We have to come out and really follow all the rules, and that's going to be how we kind of emerge as a fresh company that can really succeed in this space.
Great, Tone. Azad, you got anyone else?
Yep. The real Satoshi is next.
I hope it is the real Satoshi.
No, can you hear me?
I can.
Is Craig right?
No, it's not Craig Wright. I created this profile to ask a question. I don't really want my name out there, but I understand what's going on with the bankruptcy, and I do appreciate all of the efforts that Simon and everyone has put forth to get this to a stalking horse process and get a good result. My question is solely for myself, in that when Celsius went into bankruptcy, I had roughly 16 Bitcoins on the platform. 10 were held in a loan that was taken out at $44,000 at a 25% LTV. And after bankruptcy had started, I emailed Celsius and asked them to pay off the loan because I was concerned that I was going to hit a liquidation point and things were going to liquidate. And the collateral was there to pay off the loan on the platform. So when I look at what my claim amount is that is published, it shows obviously that I do not have a loan and that it was paid off after bankruptcy was filed. And so I don't really completely understand how loans are going to be treated and how I would be treated in that scenario, and if something else needs to be filed for me personally to receive maximum value.
So maybe Aaron, rather than going into the specifics, as sticking to the plan theme, could you help us understand what the timeline is on borrower settlement and anything you can disclose about how borrowers and collateral will be treated?
Yeah. So, we worked really hard on the loan settlement, and as I said before, it was kind of, an unfortunate part of this was it didn't come to fruition, and we had to abandon that. And I think, as I said in the court hearing, we're not. It doesn't mean that there's going to be no loan settlement. It is our job to try to work to maximize value, but any loan settlement has to balance what is a very tricky balance. And I can tell you, we spend a lot of time banging our heads against the wall trying to come up with the right mousetrap for this. But it's an equal treatment between loans and earn, and there's a bunch of different competing considerations when you get there. And part of this process, we made it clear to the bidders that we weren't considering that as part of the auction. That's kind of step 2 now, is we've got to try to figure out how to put that back together, and it might be a little more difficult at the current time, but that's kind of next steps for us. Is we are currently going to kind of see what we can do. Right now, the plan is going to assume a set-off treatment for loans as we work through that, and that's kind of, we were looking to get through the auction. Now we're going to move on with that. With respect to your specific question on your individual claim, the claims bar date has passed. it was reopened as part of the customer claims decision, but it was only reopened for affected claims. And so I would recommend that you reach out to an attorney. If you haven't filed a claim already, you should look into whether you can file one now in light of the fact that the bar date passed. However, it's still open, and so there might be some arguments, but unfortunately, I can't give you legal advice as to your specific situation. But I will tell you there are a lot of really good bankruptcy attorneys out there, and sometimes a quick call to them and a quick consult, which should not be very expensive, can help resolve a bunch of these concerns.
Hey, Aaron, is there anything you could share on confidence behind getting the class claim certified and approved, and anything you can share that doesn't release anything material that's going to harm the case on Series B?
Look, the Series B litigation, I think you've all seen, we're coming at it from a number of different angles. We feel very strongly that the value of Celsius is the creditors, and we think that will hold up in court. The class claim is one of those elements. One of them I feel very passionately about, but we're in active litigation. I don't want to either one, betray my client confidences, or two, comment on litigation. I like I'll tell you, when I am litigating and in litigation, I'll speak through court pleadings and in court, and that's how I intend to communicate with respect to this one. I will say that we filed both the class claim, which we filed on the docket, and recently a motion to certify the class. I think those pleadings, I think, speak for themselves, both with respect to what occurred at Celsius and the strength of our case. And so I would recommend everybody take a look at those. They are long, but they do paint, I think, a very good picture of what we've seen inside Celsius at this point.
Okay.
I got time probably for one more question, Simon, and then I gotta jump back on to trying to let the dust settle and get all of the trains moving around, so we're moving in the right direction here.
Okay, so should we just do Alex and I'll ask a final one? Then we'll...
Thanks, Simon. Thanks for having me. I hope you can hear me. And I have a question regarding now with the deal and the tax implications. Can you elaborate a little bit more on that? What does this mean for the creditors? Do we have to do something right away, or will that be all then kind of lined out, especially for the international people? Thank you.
Yeah, so the tax considerations, is something we've looked at a lot. And one of the things that you're going to see in the disclosure statement is there's going to be a big section that is going to describe the potential tax implications for holders. Again, it's kind of a thorny issue, and I know this is not everyone's favorite answer, but everybody's tax situation is so different based off of your individual circumstance. For instance, if you bought Bitcoin at 60,000 and are going to receive Bitcoin now, you may have a different tax consequence than if you bought it at $10 and are going to receive something that would affect or make a realization event. So I'm not a tax professional. I'm not a tax lawyer. It's generally an area that I don't speak specifically about, and I refer to my colleagues that are specialists. But I will say that in the disclosure statement, there is going to be a large section on the tax implications for creditors, and you're going to be able to take that disclosure to your accountant, and hopefully it will provide them with a roadmap and a lot of help that they can kind of leverage all of the work that White and Case and Kirkland and Ellis have done to help you all out to figure out the tax implications of this for you.
Great, Aaron. One more, if you've got time. Can you shed any light on the core scientific chapter 11 as it relates to Celsius's investment? Do you think there's a valuable asset there, or do you know much about it? You can pass if you don't.
No, I know a bit about it. Celsius was a large debt holder in core, and I believe that the debtors in our group are actively working in that chapter 11 to try to maximize value for Celsius's creditors and for the Celsius estate. Again, it's kind of a fluid scenario, Simon, so I'm not sure I want to discuss too much publicly there. But Celsius is actively involved in the core bankruptcy proceeding. And I think everyone can rest assured that we are focused on that and focused to maximize the value of that asset for everybody.
Okay, awesome. Thank you so much for your time and coming up.
Thank you all.
If we
and
compete
look, I really want
out of
to
the Voyager UCC, that would be great. It's not a high bar
there. I really want to thank you all. I know it's a long process. I said this on the record yesterday, but it's not lost on me that we're quickly coming up on a year from when Celsius paused withdrawals. That part is not lost on us. We are working our hardest, and we're going to continue working our hardest. The last thing I will say is I think that, the debtors in this case get a lot of crap. They worked tirelessly throughout this process, and they worked with us in a very collaborative manner. And I really want to thank them, because this auction was a lot about working together, both our group and their group, to get the best result for creditors. And I think that they truly were focused on that. And so, I don't want that part to be lost on everybody. But thanks for hanging in there. We're going to keep working hard, and I appreciate everyone hanging on. So, Simon, thanks for having me on.
One more request: please do not apply to sell our Bitcoin. Get us out of Chapter 11 before it comes to that. Thank you, Aaron.
Thanks. Yeah.
Bye. Okay, awesome. Okay, that was a nice little surprise. So we got some questions. So for those of you that haven't had a chance to actually review the plan, I'm going to go through some of the key components of it. I have only had time to do one review today, and I would like to do several reviews to ensure that it matches what I thought it was. And then obviously we go into disclosure statement, and there is still a bunch of stuff to be negotiated. So as the UCC says, the process starts from here. So let's. I'm just going to jump into some of the terms to go through it, and then we can invite people up to go through and discuss some of the various points. So let me just pull up my doc, and I'll let you know what I think. So the first thing really is we're expected to get a disclosure statement on June the 30th. So because they switched from NovaWulf to Fahrenheit, you've almost got to start again on the disclosure statement.
Sorry, I don't want to interrupt, but I already know I'm going to get a million questions. The attorneys have been threatening set off from day one. That's not a real threat. He's full of shit. They're not going to do it. Just calm down, everybody.
Okay, that was on the clawbacks, yeah?
No, on the loans. They've been threatening to set off the loans
no.
from day one. That's their go-to catchphrase. It's not going to happen. It's going to cause more troubles than it's worth. Everyone just calm down.
Okay. All right. Thanks for that, Tony. Right. So June the 30th is when we're looking for the disclosure statement. The first thing is that there was a new company that was set up, not to be confused with Nuco. And that new company was called Fahrenheit. And Fahrenheit consists of a group of people. And one of those is Arrington Group. That's he's been really leading the charge on social media. The other was US Bitcoin mining group. So it's a US data mining group, I believe. That was some of the original people when we were doing our original bid that we were going to partner with on the mining side. And then there's Proof Group Capital, which is a company focused on staking. And then you've got the CEO and various other people. So that company has been set up, and that company is going to enter into an agreement with a completely new company. So they are the sponsors, and they've put together a company with a group of people. They're going to enter into an agreement with a company, let's call it Nuco. It'd be great if it had a name at this stage, which is going to be 100% owned by creditors, but that 100% you'd expect to get diluted as the performance of those of the sponsors goes through. And so what's going to happen to that company is various assets are going to be transferred so that they are owned by NewCo. Those assets are going to be owned by NewCo, and we will own all the shares in NewCo. And that's going to be a bunch of DeFi cryptocurrency, whatever they consider DeFi cryptocurrency. I think they just mean staking. Institutional loans portfolio. So there's going to be a loan settlement, and the outcome of that loan settlement, some of those assets will be held within the NewCo. There'll be a bunch of private equity and venture capital investments. So as we know, the client money, rather than being used to make institutional over-collateralized loans, it was actually used like a hedge fund. And so rather than those taking on the loans at Celsius, and we all thought we were receiving yield because they were taking on risk, borrowing our coins, and we had an over collateralized scenario so that we weren't taking directional risk. But Maszynski and the previous management took directional risk illegally with our money, and so we ended up with a bunch of private equity and VC investments, and obviously a bunch of mining as well, and an intercompany loan structure that will be settled, and hopefully everything will end up substantially consolidated so that all those assets are transferred over cleanly, as the UCC was trying to say. It will also gain 500 million of what they call liquid crypto, and that is down from what was originally going to go through. So originally, about $1 billion, and sometimes there was talks of $2 billion. That probably consists of the mining value plus liquid crypto, but only 500 million max is going to go across. And the reason for that is because the rest is going to be distributed to creditors as their upfront payment. So the efforts that we put in order to try and get more upfront were improved by approximately 50% in the competitive process. I do want to add one thing. I think it's really unfair to compare NovaWulf's original bid to the bids that actually won in the end by Fahrenheit. The reason is because there were several iterations, and NovaWulf's bid significantly improved to the point where they looked similar, but had slight differences. So it's quite easy just to say, oh yeah, NovaWulf put in a predatory bid. That was their starting point. And then they improved all the terms, and then Fahrenheit were competing, and they went back and forth. And so the real comparison is NovaWulf's last bid versus Fahrenheit's last bid, as opposed to saying, NovaWulf was kind of predatory. It started that way, it got better, and things improved significantly. So that 500 million it could go down to 450 million. The reason for that is because Fahrenheit, which will probably secure investment for $50 million, will then purchase shares in NewCo. And that's what's known as a primary market, which means that as these shares are issued, the company sells some of its shares, which will dilute our 100% slightly. And again, not financial advice. If I've got any of these things wrong, I'm just giving you a summary as I understand it without having the full term sheet. And so that 50 million will then be injected into the company through what's known as a primary offering, where NewCo essentially sells equity for 50 million. What valuation will the NewCo be? Well, it's based upon the net asset value. So it will take a snapshot of all the assets that it owns, and there'll be a valuation exercise to say this is the net asset value. And then I think 50 million will be injected in. And so I think that would be the first dilution of shares. But there is a way of not diluting shares, which is that instead of injecting 50 million into the company, they could elect, and I think it's the UCC's decision or the board's decision, I can't quite remember, whether those that want to sell their shares could actually, 50 million of liquidity could be injected into a secondary market. And full disclosure, I'm a shareholder in Securitize, and Securitize is one of those the companies that I introduced to the process to try and work on being able to do it in compliance with securities laws. And so there may be a secondary market for that, and then 50 million will either go into the company or given to those that want to actually sell. And then 100% of the equity will be issued to those that have earned claims, those that have elected, that, you know, they also have the whole convenience class concept. So if you remember back in time, we were talking about cram downs, and those that have less than $5,000. My understanding is that there's not going to be much of a retail business, but you can use the bankruptcy code in order to issue this equity to retail investors. But most of the business is not going to be retail driven moving forward. And so those convenience class people, we haven't got the details on how they will receive their 70%. I'm assuming that it's dollarized claims, and then you could maybe get it crypto in kind. I'm not sure if it's going to be done similar to the custody settlement where you actually own the assets. I doubt it. And so therefore, the price of crypto actually impacts how much crypto you would receive back, depending on how they did it. But I didn't see full details of the terms. But those that elect to get 70% of their crypto back and they're less than 5K, they won't be shareholders in the company. They'll settle. Withhold will also receive an earned settlement plus 15%. I believe that's a separate agreement. And then there's this whole concept that I think Tony was talking about around set off of borrowers and how that will work. Once you've been through all of these different settlements, it's the reason why we can't just simply say you'll get 30%, 40%, because there's an infinite number of possibilities, because some may settle, some may not settle. And so you don't really know what's going to be left until everybody's been through that settlement. And then you have the total body of earned shareholders. And those earned shareholders will essentially receive several things. The first thing they will receive will take your claim. And so if your claim, for example, it doesn't matter what crypto you have. Let's say that your dollarized claim, so, you know, mine's up to, I think, the final number. Obviously, crypto and Bitcoin has gone up a lot since then. But my final claim as an individual was about 16 million. That will set my pro rata share of how much of the Bitcoin and ETH I'm entitled to receive back, how much of any litigation proceeds. So there'll be a separate company called a litigation trust, and that company will be set up in order to benefit creditors from any litigation. And then finally, equity in NewCo. So there's not really a concept, and I think the UCC tried to say, of you get 40% upfront and then 60% in equity. That's not a concept, because the Celsius is insolvent, and so therefore the net asset value of those assets, which is the value of all the assets, will be under the amount that it owes to creditors. And so the only way to get a recovery in dollar terms is for the equity to outperform, and you get a dollar claim. And then if you're thinking in crypto, if you're trying to figure out how to be crypto whole, you need the equity to outperform Bitcoin, for example, or ETH, for example, or depending on your allocation. And so the only way to possibly become whole, if you're thinking in crypto, is to have equity that substantially, outperforms Bitcoin. And so other than that, you may be dollar whole just based upon prices. But otherwise, you wouldn't expect that unless it performs incredibly well. And I don't want to give misleading information, but in the past, we did actually achieve that with the Bitfinex restructuring. It is possible, but the stars and the moons have to line up, and we have to get everything right. And so one of the most important thing is, who are the board members of NewCo? Is it a side gig? Is it their full-time gig? Who are those people? Are they crypto people? Are they TradFi people? Are they creditors with lots of skin in the game? Are they shareholders in NewCo? Who are those people, and dealing with all the different conflicts? Are they people that are used to working in a regulated environment? Are they people that are used to working in a US environment? Are they Bitcoin maxis? Are they crypto maxis? Are they NFT type people? For me, it's very, very important who those board members are, because once that board is selected, they will be the people that will make the decisions that will determine the value of the equity, and the value of the equity and what they can do with it will determine whether we actually make a recovery. So for me, it was really important to get as much operational value in the equity. And by operational value, I don't want, just a company that has a bunch of assets. It's not a fund. Operational value means that you have to create something really, really valuable. And so therefore the future vision, the dividend policies, various other policies, those are going to be set by the board, and it's very important that we get the best board possible in NewCo. There's going to be 7 members. 2 of those are already selected by Fahrenheit, and then the UCC is going to select 2 people, and then the last 3 have to be agreed from both the UCC and that. The UCC and NewCo. Okay. Convenience class we've already covered. They create the possibility of a cram down. And I want to go through the end of this, really, the options that we have from here and how we ensure that we still get the maximum result for creditors. There's a custody claim. Tony can share a bit of that if people have questions on that. But many people have already seen a bunch of their funds from custody already. And in the last court hearing, Chris Ferraro gave updates on those withdrawals. But there's a settlement. You don't get 100%. You get about 72.5%. There'll be another opportunity to settle if you miss the deadline before. And that's the custody settlement. There's a withhold settlement. My understanding is that you have an earned claim plus 15%. And the borrower settlement we don't have yet. There's different iterations that have been put through that. I think Tony and Ronan have been working on that with David Adler. We haven't heard from David Adler for a while, so you assume they're in negotiations. And there's also a new earn ad hoc that once the borrower settlement is released, you'd imagine the earn ad hoc to have something to say. The reason for that is because whatever happens with those negotiations between those that are renegotiating their loan, remember, those loans are going to become an asset of NewCo. And so there's a bit of a game, just like there was a bit of a game between custody and earn in the beginning, where custody were trying to get title of the assets that would dilute what earn get. There's going to be a bit of a game like that. So there'll probably be a negotiation and a settlement. And those that are going to have earn claims, you'd want those negotiations to work in your favor and have more valuable loans within that. And there'll be, and those that are in the borrower side, you're trying to get the best terms for you. So that will be a bit of a thing, a bit of a process. Before there was something, we had this equity share token. People are confused by that. This in the current version is straight up equity. An equity and an equity token are pretty much the same thing because it's still equity. And if you get a token, it just represents that equity, but it can only trade on a security token exchange. And so they'll be introducing Securitize as the partner in order to do that, but it doesn't really matter. Normally security tokens trade at a discount to the actual net asset value. But the net asset value is where the value is, and you can hold that because one of their aspirations, and it is an aspiration, is to eventually become a public company where it can be tradable, like some of the other large Bitcoin mining companies on a stock exchange. They mentioned a few different stock exchanges like NASDAQ or Abu Dhabi Exchange and various other ones. But that's rather than, so that was the first concept. In the NovaWulf plan, there was originally going to be what's a management share token. The whole concept of a management fee based upon the price of crypto going up was completely eliminated by both parties as the negotiations continued. And it ended up with a management fee, a set management fee of 35 million per year. And so rather than saying, we'll charge you a percentage of the value of all the Bitcoin and ETH, those are actually going to be excluded from the management fee. These were one of the key features that we were lobbying for throughout this whole process on Spaces. And that 35 million per year is going to be interesting to see in the disclosure statement how that's actually paid out. If they've got crypto on their holdings, whether they got stable, how they do treasury management. But as a Bitcoin mining company, you'd expect them, if they're in the hands of a competent mining operator, to be able to manage that. Now, this whole concept of a competent mining operator is really, really important. I went through all the different numbers, and the Bitcoin mining company, you get disclosures in court that you can mine companies profitably if you take out capex. But once you put capex back in and then you do depreciation, the company is not profitable. And I put those figures out there for people to actually see. And so the main reason for that is really, really poor uptime. If you look at the average, it's approximately 55%. We need to get that uptime way up to 90%, and we need to get those machines plugged in as fast as possible and prior to us going into the halving. So you'd expect the price to go up, but the number of Bitcoins, next year at some stage are going to be halved. We've obviously got the increase in fees that have come through ordinals and various other things. But as a Bitcoin mining shareholder, which you will be, we need to get those machines plugged in as fast as possible. So I'll go through a few of the things. The faster we can get it in competent operators, the better we can do. And one of the things that they've put is a proposal for even during the bankruptcy, how to continue deploying those rigs and get that uptime in more. So we really want to see good uptime. Okay, so that $35 million management fee is kind of a good deal for the bidder. The bidder is kind of like a VC investment you get every year. But that 35 million is not just something they receive. So there was lots of criticism around, oh yeah, you're investing 50 million and then you get the money back after year one. The reality is that money is going to be invested and used for the company. And so the mining management is 15 million. And you'll notice that there are conflicts all over this thing. So part of the really important process in selecting the board is managing those conflicts. Now, conflicts are not necessarily a bad thing. Conflicts without disclosure is an awful thing. And so as a regulated company, you have to have a conflicts of interest policy. They have to be disclosed. And as a public reporting company, you expect to know all those different things. And so we've got different companies that, and this is where I want to make sure that within NewCo, the incentives are aligned and it's not just a side gig, as I keep saying, because I think there are elements of that need to be improved upon. So as they said in the UCC, the CEO has been announced. Then you've got the COO and the CFO. They're going to be recruiting a CMO, a general counsel, a chief accounting officer, a chief risk officer, a head of staking, mining business, and other C-suite roles. Now, how do they actually get paid if a lot of that, so you've got that 35 million, 15 million goes into mining, and they outsource a lot of staff and there's various things. So really look forward to digging into the details to ensure that real value is being created within NewCo. Because what I don't want is a NewCo that's just, kind of managing assets, but no real intellectual property and real value being created within NewCo. Otherwise, we'll never recover. It's just simply, you might as well have gone to the controlled liquidation under that set of circumstance. So how do they make money? Well, they've aligned skin in the game. So they have an opportunity, 5% of the equity will be vested over 5 years. That means 5% will dilute our 100%. And there'll be performance, and each year they can get 1% of that. They also get 5% of stock options. I want to get clarity that that's a total with the options and vesting stock of approximately 10%. They get 1% per year at market prices, and they've made sure that 5% is kind of not as predatory as it originally was, based upon feedback. It could be done in a couple of ways. It could be that there's a 90-day CoinMarketCap 200 index price, or they could use something like Bitcoin as the index. So that was a really important feature that we lobbied for in order to ensure that there's not unjust enrichment just based upon crypto going up as crypto believers. We talked about the 50 million going into primary or secondary. I'm sorry if there's a lot of details here. I'll try and do a YouTube video with more visuals, and you can actually read the plan itself as well. They also made an incentive whereby the Fahrenheit team can only sell provided that their equity is trading at, say, some of the vesting equity trades at about 150% of the net asset value. So remember, all of the assets will be put into a NewCo. They will have a valuation. There'll be a public reporting company, And every quarter, those valuations will have to be reported, and we're looking to number goes up with those things. If they go up over 150% of the net asset value, this does, if you're using a security token, open up the opportunity for market manipulation that we need to be very careful of. We need to track and monitor, and hopefully the public reporting requirements doesn't have some of the shady shit that happens in unregulated tokens. And by doing it as a security token, you'd hope that some of those checks and controls and disclosures when insiders are selling and various other things are an important feature of that, so that we don't get the same, Mijinski dumping his sell token and manipulating the balance sheet so that you can get equity shareholders to overpay, and all the frauds that we experienced before. And they can sell approximately 30% of their shares provided they achieve that 150%. They can sell up to a maximum of 60% of their shares in the vesting period, only if they get up to, so another 30% will be if they can get the shares to trade at 200% of the net asset value. So the idea behind that was Centerview and Pareto were, looking to put as many measures and controls so that we don't, we can understand whether they performed or whether they haven't on that as well. They also added some additional terms. There'll be releases. They won't have releases for Alex Mijinski and S. Daniel Leone. What else? The other thing is they'll have what's called a toggle plan. So this was a feature of Voyager that was actually executed. Voyager tried to do their bids, reorgs, distributions. They all failed, and they had to go back to the toggle plan. And so the toggle plan, remember I talked about in the beginning that there's two types of plans. You've got the bid reorg, which was our first bid, and the second is a controlled orderly liquidation. And so they've implemented a bit of that with a lot more further negotiations. And so if for any reason Fahrenheit cannot get approved, there's regulatory objections, or creditors don't vote for the plan, we still have the option to vote for an orderly liquidation. And as creditors, if we don't get everything kind of in the way that we think really maximizes the value, we need to consider that, and we need to compare the orderly liquidation versus the bid reorg. So we still have the opportunity to vote for that. And there's an additional process that if for some reason we move to an orderly liquidation and they announce the BRIC syndicate as the orderly liquidation, that can also go into a competitive process. And so if you look at this, when we did at Bank to the Future, the orderly liquidation, we were simply giving everyone their coins for free, just gas fees on withdrawal, and we were giving everyone their equity. But if they wanted to actually trade it, there's a trading fee. So that's how we were doing it when we did the orderly liquidation. You'll see in this plan, there are significant fees. And so people that were kind of saying, oh, did Bank to the Future put together a predatory offer because they didn't bid anything? An orderly liquidation means that the estate has to pay the company that's performing the orderly liquidation. And so we wanted to reduce those fees, but instead we've got some pretty hefty fees on the orderly liquidation. And so they also said that all regulatory permissions have to be achieved. That's still a big thing. What else have I got on my notes? US Bitcoin Corp were managing the mining. We know that. The new board can be terminated as well. So there's some clauses around that. If this relationship isn't working well, we can move to, and there's terms around that. Access to miner operator software and management software. Because the US Bitcoin Group, they're experienced miners, they have software and they're trying to give us access to that software. This helps with managing when you sell Bitcoin in order to meet your costs and various other things. And then they just give a big list of the different types of operations and how fast they can get these ASICs that are currently just collecting dust through the Mijinski methodology and making sure that we can put them to work so that we're not just burning, because the mining business currently with CapEx and everything in is unprofitable. And so we need to change that. We need to get the uptime up and we need to get more of them plugged in as fast as possible. And so they're going to build out a 100 megawatt facility within 12 months. They gave some numbers there for about 39.5 million. So we're going to have to invest some money in this. Remember I said in the beginning, I think in order to get the mining business profitable, I estimate that you're going to need to invest about 200 million. We'll see what the end number is, but they've given all these different parameters here that they need in order to put more to work. They also had a scaling business plan. So rather than just putting the ASICs to work, they had ideas for how to get it to 180,000 so that you can get 90,000 new ASICs. Interestingly, there's still discrepancies in the numbers because they've sold some of their ASICs. Others maybe were older models. The number that I've always seen is 117,000 and 120,000 ASICs. But in this plan, they said that they can put 90,000 new ASICs online, implying that that would be 90,000 new, and that would total 180,000. So that implies that there's only 90,000 ASICs currently to go live rather than the 120,000. Love to understand a bit more about the discrepancies there. They also had it where if they don't meet their targets, if they can't get this live within 12 months, then they have a penalty of approximately $1 million per month, capped to about $6 million. And so the amount that they would receive from the management fee actually goes down if they don't meet their target. So that creates a strong incentive to try and align. And they had all these different types of, different models that they can use in order for us to try and deploy. Some are very expensive. Some are more competitive. Others are us investing in the assets so that we actually end up with fixed assets within the company to try and build the value. Others were designed to just try and get them to work as fast as possible. In the end, they want to give us an additional 300 megawatts available. My understanding is they outsourced a lot of their staff, but they had their costs for staff capped at about $2 million. And so there's lots and lots of details to try and prevent any of the things that can go wrong, which will come out in the disclosure statement. They mentioned that they can go up to about 5, so they just listed a bunch of other stuff. A little bit boring to go through, but it's worth, for those of you that are numbers orientated, you want to try and get that. They said that they've got 20K racks in one location, 15K racks with another partner, and various other things. Access to the trading desk, energy management team. And I think this is really where the Fahrenheit team outperformed. I think from what I can see, the NovaWulf team was their ability to get these mining equipment, which is a big part of it. I think that did come at a cost because we were going to get significant equity in the ATS that was going to benefit from the trading. And I haven't seen any of that equity under the Fahrenheit deal. And so, I still think that I want to understand, how I think the operating business, from my experience, was way stronger under the NovaWulf side, but the mining business was way stronger under the Fahrenheit side. And in an ideal world, you'd have, I think, NovaWulf operating the security token and that type of thing. And then the proof of work being done by the people that are great at the mining. But this is where we are right now. Let's have a look. They also, if they need to raise finance, we talked about in the Bank to the Future bid, we were going to remember we were trying to prevent a forced investment. Unfortunately, it does move to a forced investment, but they said that they'll try and give rights issues for those that want to reinvest into the future. If you're happy with the performance, then you get the right to reinvest, but there'll also be additional dilution if they need to raise capital, subject to all the public reporting requirements, board sign off, and all the policies and various other things. There's a company called Proof Group, which the UCC mentioned. They'll be adding their staking services, and they're designed to do it exclusively. I think this is really important. As I said, I don't want somebody operating a business within Nuco, but really they're just trying to get all the users over to their platform, and then they're just not really building the value within Nuco. We've got to make sure that we get the technology and platform value within Nuco. I think that was a lot stronger under the NovaWulf bid. Under the Fahrenheit, there's IP that comes across, but I haven't seen any additional equity. So that was really a trade-off. Also, obviously, Arrington Investments has its own VC arm. If they're going to start making VC investments, then we get a right of first refusal. But I don't think anyone signed up for a hedge fund here. I'm a little bit concerned about what that actually means. Does that mean that they think they can take our Bitcoin and start investing in private equity? Well, that's what's got us in this trouble in the first place. And so we, obviously we want disclosures around that. This all depends what happens. What is the operating business moving forward? But they were designed that in order to try and remove some of the conflicts of that. What else have we got? I think Cell token was not mentioned in the new. It was, I think it's still at the 20 cents pending the outcome of that. There was, what else is there? Oh, a 10 million deposit. That's got to come through ASAP to secure the deal. What else have we got? Okay, then we had the orderly wind down. Hold on, just looking at that board. We've got the board. I've already covered that. There was a little mention about this whole concept of if you have over 100K of liquid crypto, then you can actually contact Celsius and they can try and work with you to ensure that your distribution is done in the most tax optimization way. And so that was an option that they were looking at. But then if we can't get this plan approved, it goes up to the backup plan. And the backup plan was the orderly liquidation. And so remember, people were like criticizing me that we should have put loads of money in order to do the orderly liquidation. Well, we tried to do that where we didn't have to pay any of these fees. But in the orderly liquidation, but also remember, if we end up going back to an orderly liquidation, hopefully we can put this in a competitive process again, and people can compete to see if they can offer and improve all these fees. But they were essentially charging a 50 million administration fee, so they're not bidding. We're actually paying them 50 million in order to do it. They also want 10 million per year. They want 15 million for any initial distributions of our crypto. And then if you hold them, which implies to me that they're probably using their quantitative trading algorithms or something, and then we end up are we in that position where we could end up in another Chapter 11? Who knows? We'll see. But they want to charge 1.25% if you withdraw them after 6 months. If any of the guys want to come up and clarify any of these points, they can as well. 1% if they don't withdraw, before 2 years. 0.75% if you withdraw them between 2 and 3 years. 0.5% if between 3 and 4 years. And then 0.25% between 5 years. 0% after that. That means to me that they want to use our assets. So we need full and transparent disclosure and understanding of the risks. If anyone's going to actually think along those lines. What else have we got? There's also a 10% value creation fee. So if they beat certain targets, they charge 10%. And that excludes Bitcoin and ETH. So it's not a free ride on Bitcoin and ETH. And remember, this is the controlled liquidation. This is the backup plan. This is not the Fahrenheit plan. This is if we move to a controlled liquidation. And there's they call it 20% efficiency increase fee by beating some of their targets. And fees will be, where are we? Fees, I can't even read my own writing. But that's pretty much everything we got there. So just in summary, we have the actual, equity NUCO. We don't know what the initial distribution is. The initial distribution is significantly improved. There is going to be a forced investment. We don't have the free ride management fee where it's somewhat of a fund versus is it an operating company. And actually, to meet the regulatory requirements, this would have to be an operating company. The intention is to take the company public. There will be likely a security token to do the initial equity distribution and compliant with transfer agent rules and securities laws and various other things. And it's kind of way more alignment, but we haven't seen contributions of equity. And I really want to make sure that these conflicts don't exist to a great extent where we don't build. I want to see significant operational value happen within NUCO, because that's our only way of actually recovering, to the point where if you want to do a crypto recovery, it has to outperform Bitcoin, like we did with some of the crypto exchanges in previous ones. If that doesn't happen, and so we still have the option to compare that to a controlled orderly liquidation, but there's a significant number of fees in that controlled orderly liquidation. And if we go down that route, we can put it through another competitive process so that we can really avoid the worst scenario, which is the old Chapter 7 that we're trying to avoid. So as creditors, they still need to get our vote. And so the game is not over yet. We need to align around the common interest and recognize that these are good intent negotiations. We got the best deal we possibly could. I still have a lot of questions around the different comparisons and why certain decisions were made. But if anyone wants to come up, ask any questions, maybe make some comments. Most people are watching this right now. So if you have any comments, remember the disclosure statement doesn't come out until the 30th. There's still a lot of detail to be figured out. And we as creditors still have options because, if we don't like exactly where it's going, we still have and can analyze it in terms of controlled liquidation. And we can still massage the process to make a controlled liquidation more appealing. But we are here. We need to get out of Chapter 11 as fast as possible. You remember many of the spaces where I talked about the big rug pull, where if we end up in a massive crypto recovery, they could end up just deciding to buy back the crypto and equity shareholders keep everything based upon that. So we've got to get out of Chapter 11, make sure we get the right deal, work on some more of these incentives. Still lots of work to do. And then we've got to get over all the different settlements and various litigation, decide what's going to the litigation trust, and hopefully we'll all be aligned shareholders, and we can pull off exactly the vision that we got to try and pull the best recovery possible and enjoy being shareholders together. So Azad, if anyone want to say anything, add any comments or ask any questions, we can do that now.
We've got a number of requests for people to come up and ask a question. How long do you want to go for?
Let's try and keep it. I mean, I've talked for so long. What do we do? 8 o'clock? What time did we start, Azad? Did we start at 6:30? So I'll do another half hour.
Cool. Okay. Arbitrage has been waiting a while. Question from Arbitrager, please.
Yeah, thanks for hosting this call. And thanks, Simon, for covering this bankruptcy and covering the other situations in the crypto space. I think you do an excellent job of keeping everyone informed and helping the process set up in a way to generate the most value for creditors. I guess my one question, I was kind of curious. Someone brought this to my attention earlier today, but I saw that Arrington was a major backer of Terraform Labs and Luna. And, I'm just thinking, insofar as a significant part of our recovery is going to be in NewCo, I mean, how does the debtor or the UCC, I mean, how have they met their duty of care in selecting a sponsor that literally was a major backer of, Luna, which, in many ways led to, or was a contributing factor in the crypto winter last year that led to, many of these bankruptcies? It's just hard for me to fathom why we would want a group that was a major backer of Terraform, managing our capital. So I was just curious if you guys have a view on that. I was just surprised to learn about that.
Yeah. So let me take it in a number of different directions that help us. And there's no real good answer. There's just opinions and what we think is right for us. So my perspective, if we went with NovaWulf, we got very much a TradFi deal. I think it's got the biggest chance of getting regulatory approval, but it's not really a crypto business. It's a Bitcoin, it's an Ethereum, and it's a security token business. I personally believe that those are all big trends that I would like of us to have exposure to. And then you've got obviously the mining side. If we end up with Fahrenheit, and Fahrenheit are the winner, then we are getting a much bigger crypto culture. And obviously Celsius was a crypto culture. There were token holders, mainly, Bitcoin and ETH were the largest part of the portion. But there were also, lots of crypto type of people that were attracted to Celsius. So you imagine a lot of the creditor body, which one are you more theoretically aligned to? And that was really a cultural decision in who I believe the UCC actually chose in the end. They went for the crypto, and I think that was based upon the UCC's opinion about whether TradFi versus crypto. So that was a thing. Now that does have a cost benefit analysis because crypto people are not exactly in favor with regulators right now, and we have a big challenge ahead of us. And so this increases the risk of getting the plan approved and through. And in terms of the actual specific investment, so you invest. When you're in this space, I've invested in 100 companies. Some of those have been the best performing companies, multi-billion-dollar unicorns. Some of them were Celsius. You make bad investments, you make good investments. It depends if you're managing somebody else's money versus managing your own money. I'm willing to take a bit more risk with my money versus how I culturally would think about other people's money. But this isn't actually a fund. That's not the operating business. So we need to make sure that we are very clear in the disclosure statement around what we're actually doing here. Is the whole staking business, is that the yield business? Is it going after lots of different verticals, or is it just simple Ethereum yield? I'd love to, we need to see a lot more of those details. And at the end of the day, we will have an opinion about which one we're more culturally aligned to. One of them will have a higher risk factor. I think most people would be in lower risk appetite given their experience and the situation that they've been through. And so these are all really important considerations. At this stage, my preference was to go for, kind of more the lower risk, more conservative. But we ended up with the more higher risk crypto. And, the name of the game is higher risk, higher returns. And that's the game that we're currently in.
Hey, Simon?
Yes.
I just wanted to ask two questions really quick.
Sorry, Peggy. We do have a number of people that have lined up. You'll be next. But I did want to bring up. Yeah, I did want to bring up Manny. Manny, can you hear us?
I can. Yeah. Hello.
Yep. Go ahead.
Well, I can just talk a little about the ad hoc, I guess. So just wanted to remind everyone that Earn has an ad hoc now. Things seem to be going pretty well. We've heard that these bids, I think, where things are at, and with what Aaron said, it's sounding like things are looking, better and more fair for Earn customers. I haven't had really time to absorb, much. I mean, I was learning from what Simon was saying about the deal. We're not going to have disclosures until the 30th. But what we're doing is making sure that Earn customers are well represented in negotiations and that we have a good plan for everybody. And you can DM me if you want to learn more, or you can donate at earncommittee.org. And you can email at info@earncommittee.org. I'm happy to answer any questions if people have questions about the ad hoc.
Okay, thanks, Manny.
Thanks, Manny. Okay, let's bring up Peggy.
Oh, okay. I just have a couple real quick questions. One is on taxes. What did he say about when we go to claim this? Because I couldn't do any claiming this last year regarding Celsius. So do you remember what he said about that? And also, nobody's talking about having security in place for whatever company takes over all these funds, and I'm thinking, God, what if it gets hacked or something, and so there's got to be a heavy security on that somehow.
Yeah. So on the tax side, I don't know if anyone else, when they come up, they can remember what the UCC said, but there was a couple of things I picked out in the plan. One is they are working on tax efficiency. They can't give you tax advice. And they said if anyone's got 100K of liquidity, then contact the bidder in terms of their upfront, and they might be able to do a better distribution. But other than that, I didn't get much more other than it's coming. My biggest concern is I would like Nico to have a platform and compliant, secure, with good financial controls platforms are incredibly hard to build. And so one of my concerns about this one is that, excuse me, are all the value going to go to external companies, or is the value going to be maintained within Nuco? And I really want some more answers on that. But yeah, building security, massively important. I think they're going to be doing the distributions via a third company like Coinbase, who are in the business of doing distributions, and there'll be terms around how to do that. But then the ones that actually remain within Nuco, you'd expect the board to have a really robust security policy. And again, is Nuco going to be a regulated entity? I don't think it actually is. I can't see anything at this stage, because they're going to be doing the equity with partners, the distributions with partners. The mining is not a regulated activity other than local regulations on the ground. And so, what is the value that's retained there, and how are we actually going to be able to build that out? I'd like to see more, but security is obviously massively important. Financial controls, regulations, these take years to build.
Okay, thank you, Simon. And I want to thank you once again for being there for everybody. And not, I'm sure there are some people, one or two people that disagrees, but I think you kept everybody calm, and so there wasn't like a mutiny on the bounty type thing. But and so I want to thank you so much for all your help.
Thanks, Peggy.
Okay, bye-bye.
Thanks. Okay, next speaker is Jovi.
Hey, Jovi, the class claim master that made that happen. Big service to creditors.
Oh, thanks. Yeah, thanks for the hard work.
You're pretty quiet, Jovi. Is that just me?
Maybe it's my...
No,
can you hear me?
Yeah, we can hear you now.
Okay. So what I was wondering is, I know we don't really know how much of a haircut, or the percentages can't be calculated. By the time the disclosure, maybe in the disclosure statement, or by the time we're voting, are we going to at least have some kind of concept of, what this Fahrenheit company can provide people that are voting on them? Like, what will we have a ballpark maybe of what percentage we can get back?
Yeah, the really important part there is the syntax and order in which they do this. So you'd imagine that everyone, like custody right now, they've gone through settlement before the plan is approved, and then the outcome. So I think we've got to have, I think that a lot of these settlements have to be agreed, but the time frame in which they're doing, and this is where, I know we give a lot of criticism to the UCC, and we should always hold them accountable, but they have an infinite number of things that people want them to focus on, and they've got to get their job, and their skill is to focus on the right things that get us closer in the right order, and that is both an art and a science. And so, yeah, I think by disclosure statement, when we're actually voting, we really do need to know those numbers. So that means all the settlements need to be done. I don't have the answers for that. I'd love the UCC, once they're through some of this litigation, to give answers. But I don't actually have the answers to you, but it's a brilliant point and very important point.
Okay, thanks. And then one more quick one. I know you said, and correct me if I'm wrong, that this Fahrenheit company isn't really about retail. I think that's what I heard. And so I'm kind of wondering, to beat that Bitcoin price, are we pretty much just looking at mining, or what other profitable services are coming with this?
Yeah, I'd love for them to shed a little more light, and I'll get more details as I get them. But there's a staking business, a mining business, and with the the NovaWulf side, we were going to be getting equity in an ATS that also allows for the security trading play based upon those are the big trends. Proof of work is the big trend, proof of stake with Ethereum, and everything else being a security. So I really want to see that we can get that set up. But at the moment, I think it's more of a crypto play we got here, which is generating yield through various DeFi and staking stuff through their experience at doing that, mining through their experience at doing that, and it appears that there's a whole VC play, but that's basically Celsius 2.0 without the fraud, with transparency, with disclosures, and hopefully an honest team with governance and oversight. So it's more similar to, but a different version without being an illegal bank and no disclosure.
Yeah, I'll be honest, you kind of put me on a little bit of concern when you were talking about, when you look at the picture, though, it's not like Fahrenheit's really under any more regulation, right, than Celsius was. So it's just, we're still in that ball.
One of the big concerns I put forward was execution risk, and I do think the regulations is still and has always been a massive consideration in where we end up going. And that's why we still have to understand that our voting power, we still, it is still up to them and us to work collaboratively with, but also make sure that this is going in the direction we want it to do, because we've seen everything with Voyager, and we've seen everything with so much distress that we've been through. We need to get this out, and we need to get this done, and we need to get this authorized. And so switching was, I think, a big risk. Let's hope that pays off.
Okay, next speaker is Big D.
Hey, how's it going, guys? So I understand that, the clawbacks are up to the litigation trust and all that. But what I'm wondering is, if a retail customer gets clawed back eventually, what happens to those funds for that user? So, like, do they become an earn claim? Or, like, assuming that those are getting clawed back, like, are going to defend with, like, a lot of extended litigation, how does that work if, like, the regular earn distributions and equity calculations have already been dished out, but, like, these people don't get clawed back until maybe a year or two later?
Let me have a go at it, but I could be completely wrong.
Sure.
So the clawbacks go into litigation trust, and those are just legal claims. Before that, there'll probably be a whole, you negotiate, you settle, depending on which group you're in, and then whether you're in and exactly the number. And then what they'll probably look at first is offsetting, most likely. But remember, this also gets its defense in court. Judge Glenn did 100% commit to saying that the defenses are good, and that gets to be defended in court. There may be more equitable ways. We haven't seen that yet. That's part of, I think, more details that they need to get within the disclosure statement, and a big missing part. But my understanding is it just goes across to the litigation trust that will then have a committee that anyone can apply to be a part of that committee. And they will look through how they want to pursue that, and what they think is the right way of pursuing that.
Okay, and so it's not really known yet if, for example, those funds will get clawed back before or after most people's earned claims start getting paid out?
I don't know the answer to it, no. My guess is that they'll do offsets, and then they'll move the claims over to the litigation trust once you've done settlements, and they'll get to bribe you if you agree to their terms to try and reduce your exposure.
Okay, thank you.
Okay, next speaker is BP.
I also want to state that was certainly, this is a UCC thing. It definitely wasn't something that the bidders control. But as we move to the next stage of the game, maybe there's more processes that when we compare the orderly liquidation versus an orderly liquidation competitive process versus going forward with this plan and getting it approved.
Okay, BP, you're next.
Yeah, hey, first time on Twitter Spaces. Simon, I want to thank you for, I'm a fellow top 50 creditor, and I want to appreciate you steering me to get the earn ad hoc started.
Thanks to James, I'm top 10 now.
Oh, right.
I'm 289 that Majinski tried to rug.
Okay. Well, anyway, I kind of want to change subjects a little bit because I'm a bit of a Bitcoin mining skeptic, and so I wondered, is there any conversation of pursuing things like in El Salvador and benefiting from thermal utilities as opposed to the domestic United States mining?
Chapter 11 was written by American lawyers for American lawyers to keep all the tax in the US. That was where we were unable to produce the best result that we thought we could produce for creditors. But Uncle Sugar wants his cut. They want to keep everything in the US. That would be something that would have to be decided by the board at a later stage. But for now, this is US centric, US tax, US regulations for US by US.
Okay, let's bring up Simply.
Hey, what's going on? Simon, thanks again, man. You've definitely kept me up to date. I've been listening for about 45 minutes. I haven't heard anything. Excuse me if you already went over it. Anything on loans, like any information?
Yeah, quick one. No, we haven't got an update. The loans are still being negotiated. And the outcome of those negotiations hopefully will hit the docket. So nothing new.
All right, thank you.
So let's bring up Josh.
Hi, thank you. And Simon, thank you for doing all this. I actually had a similar question on the loans, to be honest. I know we don't have anything definitive, but just realistically, let's say that they go with the offset. Is that really just going to present the opportunity to pay back your loan and get back your crypto, or they deduct it, from whatever your holdings are, your collateral? Or I guess I'm just trying to understand, like, what are the potential possible scenarios that make sense?
So we've already got Plan A and Plan B that was put in the NovaWulf plan. We don't have any updates from those negotiations, so there's no additional information unless anyone from the inside, like Tony V or Ronan or anyone is willing to give that. So I don't have any additional alpha that I can talk about.
Okay. Because I have also spoken with David Adler separately, because he was trying to get in touch with like the top 100 loan individuals, and I didn't realize it, but I'm in there, so that's why I guess I was kind of wondering if there was, because he mentioned something about making I don't know what the right word is, but like a present, like an offer, so to say, of that the top 100 people agree on XYZ, and then trying to present that to the court. But then, like you mentioned earlier, David Adler hasn't really been on the spaces as of late, and so hopefully he's working on that. But I just didn't know if anyone had any other update, maybe Tony or anyone else.
If Tony wants to give any update, he's welcome to request and come up. But the only thing I would say is that it is a earn versus loans negotiation, like the earn versus custody negotiation. So whatever you think is a great deal, there's going to be an equal pushback until we hit negotiation. Tony, do you want to add anything? All right, okay. I think Tony requested as well. Would you mind just seeing if Tony's got?
Tony, can you hear us?
Do you want to give us anything?
Hey, what's up? We're still kind of working on it. It's most likely going to be something similar to the last framework. The reality is there's enough money on the borrower side to tank whatever deal goes through. The UCC has enough trouble with Frischberg. They don't want real attorneys coming after them like we would. It's not worth the hassle for everyone. There's going to be a plan in place. If I had $1 every time Aaron Kolodny threatened an offset, I would have 3 times my collateral already. Okay?
Right.
It's just lawyers negotiating in public. Doesn't mean anything. They don't have, well, maybe I don't want to say that, but nothing's going to happen. It's not going to get offset. We're going to figure it out. It's just people negotiating in public.
Okay. All right. No, that makes sense. I'll just keep my ear out and keep listening.
One context I'll give in the context of the plan is that a lot of the value is leaving Nuco. So we've got external companies that are managing the loans, external companies that are managing the securities and getting free users, external companies that are managing the distributions. And so one of my biggest concerns about this selection was the lack of value that's being retained within Nuco. And so, you know, that's one of my my things I would say. There's a lot of external companies that do their own things. And I don't know who's I want to make sure that someone's really looking after Nuco and building that to a valuable company.
So the loan, I guess, partner is Valen Technologies. They basically plan to have a retail-friendly crypto loans business, where the Nuco is going to hold all the IP pretty much. So just right off the bat, if you want that business to succeed, you can't start by screwing over loans users. It's a bad look.
Okay. Yeah. No. I appreciate that. I'll keep listening in and yeah. No. I appreciate that.
Manny, did you want to give balance to that, or should we just move to the next question?
I'll give a little balance. I mean, I guess what I'll say is, you know, if loans wanted a binding settlement, I think back when they had the 85% thing, back then when crypto prices were significantly lower, there was, you know, not too much pushback. I think now we're back to the drawing board, which is sort of like what Aaron said. You know, we're going to be pushing for everybody should be unhappy with any settlement. You know, all the coins were rehypothecated and mixed together, and the interest rates were artificially low because they were just fake. They were fakely low. So, you know, loans can loans can say, oh, it was collateral. Oh, you know, we paid interest, we weren't earning. Well, guess what? You were paying 1% interest rates because like it was all just puffery, and it was all mixed together and defrauded. And if you remember Judge Glenn with Withhold and him yelling at Deb and basically saying that when everything's commingled, you can't get 100%, all of that. Look, I mean, I think we're gonna, you know, we'll obviously have negotiations, and you know, all these things will have to be settled either as part of, it doesn't have to be, nothing has to be filed as a settlement on the docket. It can also be done as part of a Chapter 11 plan. So at the appropriate time and the appropriate way, these, you know, there can be a plan where there's treatment for different classes of creditors. Nobody has to be guaranteed a particular outcome before we know the outcome for everybody. People may want that. Certainly something people can try to negotiate. But, you know, if you're waiting for something on the docket, it may or may not come. I guess that's up to the parties in the negotiation, including the UCC. Right. I mean, I think Aaron was pretty clear that it's kind of back to the drawing board. I don't have the exact quote in front of me. I had written it down somewhere. But look, we're all creditors. I think we should all want to get out of Chapter 11 and have a deal that works for everyone. I don't think we should want anyone to feel completely screwed over. Also, like maybe earn people would love to convert their earn thing into loans. You know, some of us feel like that would be great. Some of us don't want to do it. But if we want a viable loan business, like let's be creative about that.
Okay, cool. Let's move to the next one, Azad.
Okay, we got 4 minutes now. You're good with that?
Yeah, let's try some rapid fire questions if we can.
All right, let's bring up
good luck with me.
Gravy, and then Royce. Okay, just connecting. Bear with us.
Okay. I'll try and give short answers, and we'll get as many as we can.
All right, Gravy, you got a question?
Hey, yeah, I've got a question. Thank you, and I apologize if it was answered. I've been on for the last hour or so. But my question is around earn accounts and stablecoins like USDC. I know a lot of the talk has been about Bitcoin and Ethereum. Is this going to be structured differently since it is pegged to $1 and there's no speculation behind it?
I don't think you're going to be treated differently. No, you'll have an earn claim based upon the price of petition, which is obviously $1 for you. That will set the percentage of the estate, and then you get a percentage of the litigation if you stay and earn, the equity, and the coin distribution, which we haven't got full details on how the rebalancing will be done, and whether they'll keep some stables. But I do know the last time we saw the coin report, if you look at the last court hearing, the revenue coins left the stable coins left the coin report, and they were added as revenue onto the operational funds of the consolidated accounts. So they're considering that, and I think they added 100 million revenue last time with a footnote that said withdrawals from exchanges and stable coins. So it looks like they're using the reason that we're surviving through this period is because they're saying we're a profitable business because we're selling client stable coins, which is why I tried to say to the UCC, we got to get out before we hit the point of selling Bitcoin and ETH. We definitely don't want to hit that. My guess is there won't be any stables by the time we're done.
Okay, next we'll have Royce and then Natty as the last speaker. Royce, you got a question?
Yeah, thanks for Simon and everybody. Yes, I just want to add one comment on Manny's recent comment on the loans group. So basically, we can't comment on the all the loan scenarios, right? So somebody they don't want to give a keys to third party. Somebody they have to get the loan for other needs. So it doesn't mean that the loan people only just taking the loan because there's a very less interest rate.
Yeah, I don't think it really matters why people took a loan. I mean, nobody wishes anybody ill. We were all creditors who were screwed over. So I'm not sure exactly what your point is, but like I understand people,
There's a
lot of people deposited
distinct
crypto into Earn because they didn't want to hold their private keys, and it was just a place to put their crypto, right? I mean, like people took loans for innumerable reasons, and people were Earn depositors for innumerable reasons.
Yeah, but there is a clear distinction between a loan and earn. That's what that is my point.
I reckon there's scope to do a whole learn versus earn. I know that I think Cam Cruz and Craig are doing a whole thing on clawbacks. I'm not sure if that happens.
We could do a Twitter court
space
space at some point, right? A Twitter court. We could do. I think Earn wants to do a Twitter space, and we could invite some loans people up and.
Yeah, let's take it over there because I think it's a whole.
But I want ground rules where we keep it really friendly anyway. Like, just so you know, I hope this is coming off well, but I'm trying to be very polite and understanding. I mean, I'm just like, yeah. I mean, of course, people have so many horrible stories. But like, yeah.
Okay, we'll take that to someone can organize a whole loan space if they want. Someone can take that gauntlet. Okay, let's move to the final one, Azad.
Final question from Natty.
Yes, thank you very much, Azad, for managing the space. Thank you, Simon. Peace, love, and unity to the community. The final question will be a yes or no rapid question challenge. If proposed, will you accept a board position? Dear Simon, thank you very much. Bye-bye.
Oh, I don't know the answer to that yet. It depends what I'm signing up for. I need to know that this is a reputable company doing reputable things with the utmost of integrity. So I want to see all of that in the disclosure statement. Sorry, I didn't give you a yes or no answer. Which is a brilliant way of closing off. I just want to reiterate that, look, in terms of planning, there are several hurdles to overcome. There's still a bunch of litigation. There's still a bunch of things. But just plan that I think as a community, we need to get ourselves out of Chapter 11 this year. Whatever targets people give you, we know that everything gets extended, everything gets moved, but that's what I would be planning for. We still have, at the end of the day, this is where strength comes in. We still have a significant amount of the power because there are options from here. And the options are that we can approve this plan. There's still a bunch of stuff to be figured out, even though it's been accepted. We still have the opportunity to push back on certain things. And at the same time, we can decide whether we want a controlled Chapter 11 liquidation. And if we want a controlled Chapter 11 liquidation, we can also put that into a competitive process. I know we all want to get out. I want to make sure that we get out of here by the end of the year. Let's minimize dramas and make sure that we're putting our best ideas forward. Let's be more efficient. we understand a lot of the different parts of these cases. We understand a lot of the different characters. But this was a significant step forward. And as soon as we can have various people that are our sponsors on here, we'll get them. If anyone wants to host different areas and more focused, productive debates around trying to move things forward, then please do that. But we need to be efficient. We need to move forward. We need to get the fuck out of Chapter 11, and we need to do it with honest operators that are going to get more uptime with that Bitcoin mining. And we need an operational business that has a chance at driving some kind of recovery. And so that's all I will be focusing on from here. And we'll try and do something next week. I'm not sure what the next updates will be next week, but as soon as I've got something to give you, I'll create another space. So thanks, everybody. Peace, love, unity, as always. And looking forward to seeing light at the end of this tunnel. And remember, if we get this right, we're all going to be shareholders together. And once we're all aligned, I can't wait for that, so that we can bring maximum value to trying to make the best outcome for creditors. Peace.